Hey everybody, hey traders, happy Friday. Welcome back to the final hour. It is 3 p.m. January 24th. We're wrapping up the third week of trading. I believe this is the first week we haven't had a holiday. Actually, I take that back because we had MLK Day on Monday and inauguration. Last week was Jimmy Carter's memorial. And before that, we pretty much came out of the holidays. So never mind. Next week, full week and lots of action next week. If you're paying attention, we have the Bank of Japan last night raised interest rates by 25 basis points. They are one of the few central banks that are raising rates. Granted, they were in negative territory for over a decade, but have gone from negative 0.1 to 0 to 0.25 to now 0.50. Didn't really change much on the currency side of things. I'm still watching. I'm long Japanese yen with some Japanese yen futures. I'm also long FXY with a JPY based ETF. I also want to put on a trade. I'm actually going to get into one right now. I'm going to put a collar trade on, buy some shares of URA, and I'm looking for this to be a bit of a uranium play. Could we see $34, $35? I want to have some protection to the downside. I think if I go out a little bit farther, let me see what this one looks like. 35. I'm looking at like a 20 delta. So if I go, let's go a little bit farther out. Let me see the comparison here. So this isn't too bad. If I go to March, so the 321, 35 by 25, that's offering about 40 cents credit. Okay, if it's worth it to go out another month, let's go to April. Now I go to a 20 delta. I could go up to 40 bucks. Well, I go to 37. That's a 17 delta, $37. Gives me another couple dollars of upside. Protection, so 87 cents. If I were to, I don't mind that. Do like a 37 by 25, so I've got some protection. If it gets called away, buy the shares around $30. Take it. So net would be about $30. Get $7 of income. That's not too bad. I'm going to take this trade. So first and foremost, I'm going to buy the shares. So this is going to be, I just got a couple new accounts added in today, so I'm doing some allocation here. So let me go ahead and buy the shares. 30.69, I'm going to buy 300 shares. And all the way up here, so just around a 10K allocation. And copy that into this account here. Okay, so those allocations are made. Now I will sell the 37 and buy the 25. $36. That's a little bit better. So 36 and 25. If I get it called away, I'm getting 33 cents income. Let me see. April versus June. 37. It's a 17 delta. We go to the 24. All right, these prices are a little wild. Probably the 25 is okay. 24 is a little bit better. I'll take this one. So I'm going to go 37 by 24 collar trade and note the debit. That will be for 3 contracts. Set that in for this account. 25 cents. See if I can get 24. 24 filled. And now next account. There we go. All right. So it should have URA, shares, and collar. URA, shares, and collar. Perfecto. All right, let's add this in. URA, allocation. And so I buy shares at 30.68. And I have a sell call. So collar trade is a 417. 417 expiration, $37 sell call, and a 25 buy put. The buy put cost me 21 cents. That's one account. And this one cost me 20. So 20 to 20 cents there. Cool. So now my break even is 30.68 minus 24 cents credit. So 30.68 minus 24, $30.44. If it gets called away at 37, I make 19.68. That would be called away by April. I will continue to roll it. I'll continue to collar it. I'm looking for this to be a trade that I can protect to the downside. Where would I like to take this lower? Well, if I own some shares here and it gets called away, that's fine. I could reestablish and recollar. If it goes to the downside, either here or here, looking for some pretty nice support, I'd be really interested in taking some ownership, or at least trying to work my cost basis down to about $20. Even if this is a range trade from 20 to 30, that still does pretty well if I can lower the cost basis. But I'm looking for this to hopefully offer up a really nice trend trade, something like that. So if we have a decent trend line support, if we break the highs around 35, then I will try to get out of the way. If we get above 35, I might just let the thing run and start moving stop losses on owned shares as opposed to trying to add options around it. But that's it. So I'll take that trade for right now. Am I going to do a spread? I'm just doing the I'm doing income. Well, not income. I'm just doing a collar trade. So I'm buying shares. So oops, trying to do a text box here. So buy shares at 30.68. Add collar trade, which is a 417 expiration, 37 by 25 collar. I guess I can just add that in. So break even is 30.44. So that's the trade that I just did. Okay. Yep. So I'm trading uranium. I also put in a trade in my Pulver alerts that looks like this. This is a combo trade. So I have a call condor up here and I have a put condor down here. Price is current, slightly favored to the upside. But because we've had a 7% rally to get there, I'm looking for February to be at least a pause. At least a pause. I'm hoping there's a pause. I think things will slow down just a little bit. Earnings next week will be interesting. So if you're paying attention to the calendar next week, what do we have? Next week, trading. We have earnings heating up. Notables would be Meta, Microsoft, Tesla, Apple. Starbucks has some earnings. I think Visa, MasterCard have earnings. They've already moved a lot in the first couple weeks of the year so far. Anything else that I'm missing? I think Intel has earnings next week. But there's a lot of market cap just in Meta, Microsoft, Tesla, Apple. We had a big swing in Netflix this week. Also, on top of that, we have FOMC. Rate decision, supposed to be a pause. But comments and volatility, we'll find out. Friday, we have PCE and core PCE. Higher inflation, we'll find out. I don't have a forecast on it right now, but we'll take a look at it on Monday. I do know if we look at the right here. So if I go into some inflation data, we have CPI, PPI, core PCE. Let's have a look at this. So basically our core PCE bottomed out in July of last year and has been trending higher, albeit subtle, still trending higher from the lows in July of last year. So core PCE trending higher. This is the Fed's primary inflation gauge. I don't know if they're willing to let this go and drift up into the 3% zone. I would think that they've essentially, without telling the market explicitly, they've tolerated like a 2 to 3% inflation window. But we are really operating at a much higher inflation than that. The last 4 years, we've had 4+% inflation on all major measures, and wages have not outpaced that. The markets, the markets return 20+% in 2024 and 20+% 2023, but you're getting everything expensive. Like everything's more expensive. So if this trend continues, it's going to continue to put a lot of pressure on equities, where you can't just inflate your way through without having basically a second wave of inflation or even getting into, I would say, a mild case of hyperinflation. William, we talked about it this morning. There's time, man. There's time in February. Those trades are, I know that like the 610 to 615 level on XSP and SPY, they're being threatened right now. But that's also why it's defined risk. So I'm going to let those ride a little bit longer, as opposed to taking the loss where we might see the market balance out through February, fill some of those gaps we saw the last couple of weeks. So I'm going to let it ride. Okay. Arthur says, this week I lost with my Tesla Netflix calls. That wasn't my trade. What'd you do on that, Arthur? I mean, Netflix. How did you lose on Netflix calls when the thing went up like 15%? Not sure how that happened. Tesla. I'm not really sure what Tesla did this week. Tesla slightly softer this week. Yeah, so be it. I still think Tesla's going to pull back. So high, low, lower, high, lower, low makes some sense to me. If we go high to low, if we're getting some type of like, trying to think here, if this is like a high, low, lower, low, does it have the ability to come back up into these highs? Maybe. I think we'd struggle at all-time highs on Tesla without additional justification. If we have a miss in Tesla, then be prepared for a ton of volatility, some big gaps, and we'll have to see if this thing can be eager to fill some gaps. But if Tesla has good earnings, this might be another big rip to the upside, where the first thing is just push it up to all-time highs. Just Tesla goes nuts to 475 again, but I think it would still be not capped necessarily, but struggling to make justifiable highs above 490 or so. Okay. Netflix is still hanging out. I mean, I had a trade in at Netflix. We were trading at 866. I did a 915 by 920 bull call spread. I mean, that's full profit today. The other one I did on the downside was a bear put spread. They were both out of the money. My net profit was around $2.15 per contract. So I traded it both ways, and we had a big move. I didn't trade just one side earnings. I traded both, and Netflix delivered to the upside. The market ripped like crazy. Expected move was 10%, came in 15%, which was impressive. And so I do wonder going into earnings next week how many stocks are going to have like a big earnings report to one side or the other. And I just think that there's trades. There's going to be catalysts. FOMC next week as well. We could have some decent movement on the SPY and the QQQ. SPY or S&P hit all-time highs this week. We are actually finishing. We're kind of limping into the finish line this week, which might be actually finishing on the day for red. Yep. So we're red on the day. Again, I'm looking at some gap fills, possibly some gap fills over the next few weeks. Two levels I'd be watching. So look, if I'm a buyer, I like the idea of filling some of these gaps. Anything in here, like if we get a dip, then yeah, sure, we can fill some gaps, backfill some gaps, pull back a little bit, have some dips. The channel here also, like resistance, resistance, resistance. We pull back and find maybe equilibrium. So we have a low, we have a high. We'll see if this market pulls back to like 30, 38%, maybe 50%, and then see if the bulls want to step back in. If they don't, then this might be just the noisy mess we're going to deal with, which is the bulls poke the highs and the bears sit here at the lows, and we have a broadening pattern that is about to get underway, and possibly this comes back to retest lows. I still think this moving average is going to get hit sooner than later. We're at 300 plus bars on the daily, which is quite a bit. We also stretched away nearly double digits on the 200 moving average. So I'm just a little cautious of how this thing can go dramatically higher without having some sideways movement. There's a lot of stocks that have hit highs and have gone sideways. Here's an example. Okay. I mean, we haven't hit highs really. I mean, this is not significantly higher highs since February of last year, and that's on ExxonMobil. If you go to Chevron, and I know this is energy, this isn't tech, I get it. But look at this thing. Chevron had a run into 2022, has been in a range ever since. You look at Meta for the last several months. Meta did hit some fresh highs this week, but still a ridiculously high bar count. Meta with earnings next week. If they, I mean, if they hit earnings, great. I could see a pop to the upside gap and then a gap fill aggressively. If they miss on earnings, we're probably dropping really far back down to the 200 moving average, and we see if this market is made of as far as buying a dip. So I would wonder if there's going to be, and that was a little proclamation that I made, and I was incorrect. So hit 200 EMA before hit all-time highs. It didn't. It just hit all-time highs this week. So I still like the 200 moving average. It still has a wacky bar count all the way back here towards last year, January of last year, actually January of 2023. So we've gone almost 500 bars now on a daily time frame, which is a lot. That's a really high bar count. So I think a pullback would make some sense. That's what I'm looking for. What else do we have here? Apple right around the 200 moving average. I put in some income trades. Apple has earnings next week. Amazon up to some fresh all-time highs. Google sitting here at fresh all-time highs for now. I'm going to wait for some pullbacks. Meta has earnings next week. I will wait. Maybe trade an earnings trade, but then look to see how I can position for it. Microsoft, hopefully you just see some chop in this one. If Microsoft comes back down to these lows again, I will probably continue to establish additional income trades back at these support levels. Stay out of the way, and there's potential ownership. I don't mind owning it, but it's going to be own it to repair it, not necessarily own it for hold. I would try to repair it within like 30 days, 60 days, and turn it into a couple $1,000. Okay. Yeah, Arthur, do you think that works? Arthur says Trump said today is asking Saudis to drop price of oil. You think it works like that? That's it? You just ask them and they do it, and oil prices drop? Do you think he can just ask the Fed to cut rates and they're going to cut rates? It's like, this is what you're going to deal with for the next 4 years. Trump says one thing, and if it doesn't happen, he can blame who he asked. Saudis didn't lower oil prices. Oil prices go up. Well, the Saudis didn't do it when I told them to, right? Higher inflation. The Feds didn't cut rates like we told them to. It's like cutting rates is worse. Cutting rates will make the markets way more inflationary biased, right? So anyway, it's just going to be the guy's going to say a lot of things. If anything goes well, he'll take credit. If anything goes badly, he'll blame. That's just who he is. So, and that's not just president. That's who he's been his whole life. If you ever watch The Apprentice, you think that guy ever took any blame for anything? It's like he was the smartest guy in the room. So now he's our president. But what I'm saying is there's going to be a lot of noise every single day. Somebody asked me in my Discord today, this looks like stagflation, blah, blah, blah. Look, it's about price action. If this market starts to show signs of waning and we start to see some gap filling and backfilling to these gaps, sure. Like today, as an example, coming into next week, could we have some gaps get filled? Sure. This market has gone up 6 to 7% with essentially zero pullbacks, right? That is an aggressive move to the upside to get to all-time highs, which good, awesome. All-time highs. We can celebrate it. But the question now is there momentum like we had in 2024, which was 57 all-time highs for the year or 58 all-time highs for the year? I don't remember which one it was, but it was right there. If we hit the all-time highs and then we come all the way back down, hit the backside of this trend line or fall back down to lows, it's just a big reset. Okay, so we will see what happens. Anyway, Microsoft, if we get some pullbacks, we have earnings on this next week. I wouldn't be shocked to see Microsoft have good earnings and pop back up to the upside. If we have bad earnings and it's down here, I'm probably still going to establish some positions with a higher implied volatility and then do the same type of thing I did here in the 300s. Just try to stay out of the way, get some implied volatility, and generate some income. Netflix had a good run this week. I'm not doing anything. I actually would almost be interested in, I'm going to see if I can price something out here. This might be crazy. And you can call me crazy, but I'm willing to take this trade if the risk is okay. I'm going to look at a call condor out to March. The IV is 10, which is nothing, but the premiums are okay. If I did, let's see here. I'm just going to base this on like a pretty mechanical setup. So if I went to like a 20, that's 20 wide. This one might have some risk on it, but let's find out. If I go 20 delta, or this one's a little bit cheaper, still 20 wide. How much does that one cost me? Cost me $3. This one cost me $2 and change. And then I would do a sell. Man, the premiums really drop off after that 10 delta though, don't they? 229. Never mind. It's not going to work. I guess what I could do, I mean, this, I don't know if I'm going to get a premium for this. If I did like $1,000, I could do a butterfly. I could do a call. Let me do a butterfly spread. Let me see what the price looks like. Butterfly call spread. What would be expected move is 75 through March. Let's see. That's going way out there. I don't know if I go out that far. So Netflix by the 31st. I'll go out to the end of February. End of February, see if I can sell a butterfly spread. That's a 25 delta. Let's try this one. So if I pin it around the 25, let me move these down. So if I look at a pin around the 20 delta and do a skip strike, so I can get 62 cents now. If I go a little bit wider, profit trap around. So we'd have to go 1,050. 1,050. So Netflix would have to go, and this, I mean, anything is possible on the stock. This obviously can move. 1,050 would be Netflix on top of earnings would have to go another 7.8% higher. I would say right now it's a pretty good trade. I am taking some heat and I'm taking some risk. I can tighten that up a little bit. The difference between, making $1.80 income versus 83 cents or 89 cents. I do have a profit trap here, which is okay. So I wonder, I mean, I'm going 10 wide. Actually, if I lose on this trade, this is interesting. I could actually, if price goes up through the 1070 level, I still make $10 on the trade and my max risk is 915. So either way, if price stays where it is or goes lower, I make 85 cents. This actually works out if I can get filled. The important thing is I've got to be able to get filled here. Yep, I just saw that mid price change a lot. Probably because I'm talking about it. Let's see here. If I try this trade, this is a little bit better. Again, same thing. I can still make some bucks to the upside. I'm going to take this trade. If I can get filled here, it's pretty wide, but let me see if I can get $1. Let me see if I can get $1.15 for this trade. All right, mid price is 60. Oh, fudge. That was way off. I mean, this is wide. Let me see if I can get this one filled. I got filled for $1. All right, I'm going to take this trade. Okay. This should be pretty difficult to lose. And I'll explain the mechanics. I'm just going to get this one filled for $1. Let me see if I can get a little bit more for it, though. Can I get $1.10? Nope. I was trying to get greedy. Dollar, maybe I can get $1.05. Nope. All right, give me $1. I'll take it. Don't make me take less than $1, please. Got filled at $1. Okay. Okay. And I think a couple more accounts. Okay. So this one on the call side, I think I should be good. Okay. So the way that this trade works, do you watch Visa? Yeah, there's earnings next week. I had a bear call spread through December that worked out pretty nicely. I paid $1.95, closed it for $3.75. Max profit was $5. Timing wise, I got out fine. It was trading up to like $4.50, but I got out early. So Mastercard, Visa took the same trade, and it was $1.95 for each one. Debit wise, I closed out for like $3.05 on one of them and $3.75 on the other one for profit. That was a trade in December. I watch them. Visa's up to all-time highs again. There's earnings next week. I'll see what happens. I'll probably trade post earnings. Currency wise, Euro Swiss is looking pretty good there, Phantom. I'm in Euro Swiss, and all my Swiss pairs are looking a little bit better. Euro Swiss, I'm starting to stack in a little bit heavier again. I'm putting some buy stops along the way, trying to target 98.80 to the upside. So I'm going to stay long Euro Swiss. Other than that, dollar pairs, I'm back to profit on Aussie dollar, New Zealand dollar. I'm going to hold those a little bit longer. Dollar CAD I close out for profit. Dollar Swiss I close out for profit. Yen pairs I'm not trading. I'm just doing Japanese yen futures. Um, Other pairs not in. Aussie New Zealand, nothing that I like. Aussie CAD, New Zealand CAD, I'm still holding those right now and scaling in. That's about it. Okay, so I want to walk through this Netflix trade really quickly because the way this trade works is, let's say that price goes all the way up here. Okay, well, I have a 1030 and 1040 bull call spread. So the max profit on that is $10. So if I make $1,000 on that trade, okay, I make $1,000 on the bull call spread and I collected $1 on the net position, my max risk would be $900. Okay, so my max risk being 900, but I've got a profit trap. Like, there's risk in the trade. Okay, but if my risk here is 900 and I have a bull call spread of 1,000, there's not really a lot of risk on this trade. Like, if it goes way up here, as long as this bull call spread I can close out for as close to $10 as possible, or I can close out this bull call spread for at least $9, then I can take a net position and net profit. Okay, so I'm going to add this in to my tracker. This is Netflix. This is a so all accounts, that's IRA and margin. It is a Feb 28 expiration. So I buy the 1030 call and I sell the 1040 call with two of them. And then I skip to the 1060 and I collected $1 credit. So probability wise, this trade has about an 82% chance of profit. So 82% probability of profit. I have $1,000, so it's $1 on credit. I have $1,100 profit trap, and I have a max risk of 900. So as long as I can close out the bull call spread for over $9, I don't really lose anything on this trade. Ideally, it's just an income trade and it never gets above, never gets above 1030. But if it basically pins, and this is what I'll find out, if by the end of February we're trading at 1030 or 1040 within that window, that's a profit trap. That's a profit trap. So the spread looks like this. It is a broken wing butterfly. So this is where I took in the dollar credit. This is where I have the $10 max profit. So if price is right there at 1030, so there's my 1030 strike. This peak is my pin price at 1040, and this is my risk if we're beyond the 1060. That's where my risk is. So this is where I lose money. Okay, but what's interesting is, let me build out this trade. Sides of this. So this is the put condor, call condor that I posted earlier. Let me edit this out for, let's go Netflix. Let me edit this for a February trade. So it's 3 legs. I'm buying the guts, sell the wings, actually vice versa. So sell the body, buy the wings. This is out to February 28th. And that is 1030 on the call side. So 1030, pinned it at 1040, and then the 1060 for the skip strike. Okay, that should be correct. There we go. So there's risk in the trade. Okay, so this is my dollar. There's my profit trap, and there's my risk. So because we are going from 40 to 60, that's 20 wide, right? So that's a $2,000 risk, and then I've got $1,000 on the bull call. So, I can lose $900 in the trade, but I still have a profit trap that's 1,100. I've got a high probability income trade that's $100. So I like it. We'll see what happens. And based on this post earnings move, I would like to see maybe a little bit of a gap fill, perhaps. And if that's the case, and this trade gets even better, and I could probably, if this decays down to like 10 cents or 5 cents, I'll just take the profit. But if it gives me a chance for a profit trap, I'll just keep it there. Okay. G is asking, do I live stream every day? Usually, yes. Usually Monday through Friday, 3 p.m. I do a final hour segment just like this. Yep. So I'm usually live, and then I run sessions all morning. So I want to ask a question. Donna, are you in the room? I saw Donna pop up earlier and say hi. Could I do a quick request? So this is request to my members or followers. Okay, I'm just going to type this in the chat. If you have traded with me, let's say, I've been running trading rooms now for 5 years, managing for 10 plus years. If you traded with me over the past few years, will you kindly email me a testimonial? I'm doing an earnings course through Prosperity Pub in the coming weeks, and I know some of you that have been in my trading rooms in the past. We've taken a lot of trades together. We've taken anything from income trades to earnings plays to what's the state of the market to hedging. To adding all sorts of things to the mix, from just like buying calls to selling spreads, adding some pretty complex things, trading earnings, where we do iron butterflies, reverse iron condors, jade lizards, you name it. We've probably tried it at least a couple of times, but we have some bread and butter trades too. So point is, can you send me an email for testimonial trading, stocks, options, portfolio management, and earnings? I would appreciate that if I can just get some feedback on. I know I've had a lot of trades over the years, so you can send me an email. My email is pulver.chris@gmail.com. Okay. So that goes out to anybody that's been a follower of mine, that's been in my services, trading with me, even my services right now, daily profit play, waterfall income, and double up alerts. I try to run really successful services, and I care about every trade that I place. My money is on the line, client money is on the line, and so I don't mess around, you know. So I take this really seriously. And when it comes to earnings trades, earnings is a major catalyst in the market. It is essentially a coin flip. There's no real edge in earnings trades. The market can either go as expected, go higher than expected, or go less than expected. And I try to use those probabilities to our advantage, where basically I look at a very calculated probabilistic move. And, again, I want to build up a decent sample size where we might take like 20, 30, 40 trades during earnings season per quarter, but let the chips essentially fall where they are. It's like trade the mechanics, see what price does, keep it cost effective, and book some nice profits. So that hopefully will be. I think we're doing that the first part of February. So if that's something you're interested in, you want to trade earnings, those are trades where usually within 1 to 5 days, I'm out of the trade. Like, I don't like to sit around and wait in earnings and hope I hope it comes back. It's not that trade. Earnings is, I want the movement. I want maybe 1 to 5 days of follow through. And that's it. So, and we just try to keep it pretty simple. All right. So I'm going to add in the Netflix broken wing butterfly. And that was a 1030 by 1040 bull call, a 1040 by 1060 bear call. So ended up getting $1 credit, and we'll see if that holds with a probability profit. Okay. All right. NVIDIA, we're at 142. I still have a collar on NVIDIA. This isn't a surprise that we are going fading off these highs again. I've said that I don't think we're going to hit too much higher high-wise. I actually have an iron condor right now in NVIDIA. Let me take a look at that one today. Let me see what I have for NVIDIA. I'm not sure if I took this on all my accounts or just some, but I will find out. NVIDIA is, let's go here. That is a ratio spread. There we go. So there's that. That's the shares that I own. There is my 140 by 125 collar. Then I have a 115, 110. Get rid of this. February 28th, the 115, 110, and the 160 by 165. This trade right now is trading for $1.21. And I got into it for, let me find out, NVIDIA. Okay, really? I got into it for $1.36. We're trading at $1.22. Son of a gun. How long have I been in that trade? Days open. I've been in this trade for, man, it seems like a lot longer than just a. I've been in this trade for 9 days. All right, never mind. It seems like a lot further than that. I'll wait till we get to like the 20, 21 day, kind of the halfway mark, and see what this is doing. But if we're in between, this should be fine. I could probably take a majority of that profit. All right. Anyway, that's NVIDIA. Okay, Tesla 406 earnings next week. I do have some dollar cost average positions. I own some shares. If we get a pop to the upside, that's totally fine. If we have a pop to the downside or a break to the downside, I've got two levels I'm going to dollar cost average back into, 362.50 and 285. I'm looking at some income trades down here with higher implied volatility. If we really push back into these dynamic trend lines, then I'm going to end up scooping up some more Tesla. Berkshire Hathaway had a nice little pop to the upside. I'm still sitting here with a ratio spread out to March. SHY, so we've got bonds still, I mean, they're off the lows, but nothing impressive. If we look at yields, 10-year yield hasn't followed through. I've got a chart alarm set. This is a really important chart to watch for the year. Either we're going higher, we're going lower. Guess what happens next week on Friday? PCE. So that will tell us. I mean, I think a big sign for equities to be able to go higher would be the 10-year yield has to go lower. If that is the case, then I won't be so skeptical of the markets making all-time highs. But if this goes higher, and breaks these highs, that is the bond market telling the Fed that they messed up. So I don't know, but chart alarm is set. We'll see what happens. This is no good. This is okay. There's still a lot more relief to come if we are going to see some trending and traction here, but I don't know if that's the case. This market is just fully believing the narrative that inflation is going to get worse. And if that wasn't the case, we wouldn't see the dollar doing what it's doing. Inflation, gold is doing what it's doing. So we've got, new all-time highs on gold or close to it. We've got the dollar's been ripping since September of last year, and the U.S. 10-year is up. Essentially the exact same as the Fed cut, right? This thing went up 120 basis points, and the Fed cut 100 basis points. That's pretty wild. So it's a chart that we've got to watch. Anyway, mortgage rates, we're just under 7, but we've been going up since the lows at 6.09. Futures wise, I'm going to wait on dollar related futures like Aussie Euro futures, pound futures, corn, soybeans, wheat, cocoa. I wish I could trade cocoa. I want to trade some cocoa with Tasty, but I don't have that opportunity. They just don't have it listed. FTGC is a commodity based ETF. I'm going to look for a range here. I like this trade. If I get a range trade, I don't think being long commodities or value is a bad play, but I would just not plan on it making a big gain this year. I would just plan on it being something I want to build into because value is super, super cheap and has been underperforming for years. Spreads are still pretty tight, which is good. China is okay. I think China's going to have a big year. Look, the global economy has been carried by the U.S. since COVID. Everyone shut down during 2020. The world did stimulus, and then 2022 was the tightening, the deleveraging, and back to normal. That was pretty much a reality check. The U.S. is like, we're just going to keep fueling the fire, right? Like what Ben Bernanke and the Fed did back in 2008, the corporate bailout, adding basically a market backstop. I just listened to a podcast with Stanley Druckenmiller. He was praising like Bernanke for doing this. He's like, but the problem is they did it because they had to. Like this was an emergency measure. Now we just fan the flame, and we're just pouring money to like keep the fire burning, and it's not an emergency. But yet that's why our deficits are higher, and that's why we've collected 66% more in tax revenue, but yet we're like 99% more in spending. So we're just totally off base when it comes to fiscal responsibility. But we have the central bank, and we have the printing press, and we continue to do what we do. But China, on the other hand, world power number 2, has not been doing anything as far as major debt and major stimulus other than being a little bit vocal about it since last fall. So September to now, vocal, but you can see that this was the hype around it, and then this is the reality. So this market is not yet convinced that we're going higher. But I do think, technically speaking, it looks pretty good. So I still like China with just a couple of exposure plays. Alibaba I like, Baidu I like. I'm only in Alibaba and Baidu and JD. That's it. The other ones I got out of FXI, KWeb, MCHI, and I'm trying to think of what other one. That might have been it. 1, 2, 3, 4, 5. Yeah, I had 6 trades going, and I'm out. I only have 3 left. Schwab dividend, Schwab growth is fine. A lot of stocks have popped back up above the 50-day moving average by a lot, actually. This was one of my timing indicators. I didn't get the exact buy trade that I wanted. I would have been long to SPY and long equal weight, so that worked out pretty nicely. I was long RSP, which is equal weight, and I was long SPY, but I was looking to see could we get back down to this level, which is around 11%. If we have 11% or less above the 50-day, that's typically seen as a pretty good buying opportunity. Right? Same thing here on the Nasdaq. The Nasdaq, if we came back down into 11%, that's a pretty good timing indicator to get long. So we just didn't quite get down there low enough, but it is what it is. Costco, I'm going to wait. If we get a pullback on Costco, earnings is coming up in late March. Walmart, I own some shares. I've got a collar on this one. If it gets called away, that's $1,000. Nike is fine. I've got a 65 and 60. Here's Visa and MasterCard. MasterCard's back up towards all-time highs. Visa blew through the all-time highs by a lot, actually. That's crazy. I'm not sure how Visa had that type of run. That's an 8% move in the last, 2 weeks. So, earnings is still coming up. That's a lot of movement on Visa, and MasterCard is still right back to the highs. Not quite as impressive, but Amex is also very volatile. So it didn't quite get to the $20 move that I priced in this week. I didn't take the trade. I just wanted to put it in there hypothetically. But Visa is way up here with earnings coming. I almost wonder if Visa would be a good selling opportunity as far as earnings next week. So if I go to earnings next week on Thursday, if we come into next week's trading, let me actually look at either a Friday that would be the 31st or the first week of February. Let me look at Visa for a second. I'm wondering if the goose is kind of cooked when it comes to, okay, we had this big run, we had this big rip. Is there anything left in the tank to push it anywhere? Yes, no, maybe. I'm not sure. And this, I'm just going to price it out. This may not be a good trade at all. I'm going to find out. So let's go to the 7th or the 31st. And the expected move is around 1041. Let me see what I have here for Visa. So expectation is around 3.79. We've got 8, 8, 6, 4, 4, 3, 2.5, 3, and 3. I'd say 4. I mean, we had some outlier earnings at 8%. That was back in 2023. So obviously there could be some more than expected, but let's just say 4%. Okay, the stock is at 329, 4% at a 329. We're looking at about a $13 move. Market makers show a $10 move. So I wonder if we're trading at 330 going into next week, could I sell a 345? And could I sell, and to be fair, like maybe go up a little bit higher? That's now a 10 delta. But I'm curious. Like I don't know. I'm gonna look at like defined risk here, but a 350 by 310. So I could get this trade for a dollar. I mean, $1.15 is my income trade. Buying power on a margin account ties up about $3,000. If I put a spread on this, it shouldn't be that much different if I put a spread on it. Now the buying power is cut way down, but I still have risk in the trade. I'm basically risking $900 to make $80. That's not great. If I go one strike more, closer to price, I get a little bit more premium for it, but not much. I still take on $900 of risk to make $100. I don't think the premium is that great. It's a 42.3 Ivy rank. That's okay, but it's not enough for me to justify that type of reward to risk. So I'll probably just steer clear, see what happens. Anyway, one other thing here with post earnings is how many times did we at least get to 4%? What is this here? January 6th, I started a diagonal spread campaign, Alibaba, hoping to ride it all year. You already got called away. How tight did you go on your sell side? What'd you make on it? I mean, it hasn't really done much. Okay. Thoughts? Boeing, equity wise, I don't like Boeing. I've traded a little bit. I had a nice little rip on these support levels. So I bought Boeing. I started at dollar cost average in around 150. We had lows around 137. I bought in around 150. We had this rip up into the 180s. I took profit on this. I think that Boeing is it's kind of a government subsidized company. I think fundamentally it's, maybe as high as 250 technically. If we pull back, I mean, 140 to 120, it's like I like buying it, but I don't want to put a ton of money at it. If it was like 125 back up to 250, but fundamentally, let me take a quick peek here. Where's it at? Simply Wall Street. Let's go BA. So, just below fair market value, forecast to grow, that's all good. Price to earnings is really, really cheap. The problem is Boeing can't catch a break. I don't know what they do, debt wise or restructuring debt wise or cost wise, but it just everything in 2024 is terrible for them. And fair market value, it's like there's not really a bunch of upside that I get excited about. So if Boeing came back, I'd say to like 135 or 125, then I'd probably throw something at it. Yeah, but otherwise, I'm out. I mean, I bought it at 150. It went up to 180. I got out of the stock. The next trade, that was a ratio spread. That's done. So I'm done. This trade's, I don't need to mark this up anymore. But I'll keep this in case we have a pullback. If we have a pullback, I wouldn't mind seeing a bounce. But if we go higher, I'm not going to chase this thing. I want to get this at a good price. I would consider if I can do something at 120, maybe if the IV is high enough. Boeing, IV's at 26. It's just the premium is going to be garbage. We've got earnings in January. If I went out, let's say to March, and I said, look, I'm willing to own Boeing at 125 or 130, you can see here that the credit's nothing. If I did a ratio spread, I'd get like maybe 5 cents on a ratio spread. Yeah, 5 cents on a ratio spread. No thanks. So I don't like it that much. And I don't want to buy it. So I'm staying out of it. Let's see here. That's your oh, gotcha. Okay, nice, man. You made $9 on that. Good. Very nice. Very nice. Okay, I priced out Visa. I don't really love it. Johnson & Johnson, I'm sitting there with a 140 put. Progressive and Chubb, these things have earnings coming up as well. I'm doing some form of income trade on this for right now. Progressive by February at 230 by 225. Earnings all the way out to April, so it's not an earnings play. I thought this had a really nice bounce off the 200, and I'm looking to see if there's more to it. So the downside is that insurance companies are finally starting to take some heat because they are just increasing prices galore. Car insurance is up 56% in the last like 5 or 6 years. It's staggering, and government wise are like, oh, insurance has actually been losing money. It's like that's total BS. So home insurance, car insurance, health insurance, it's all more expensive, and if it seems like less and less wants to be covered. Okay, so anyway, I still have an income trade. I am willing to own PGR and repair it. I'll probably try to repair it for a couple $1,000s if I take ownership, but otherwise, I don't want to take anything other than just get the income on it. CB, same thing. This one is an income trade out to May for $200 per contract. Palantir, the little engine that could, the $1,000 winner, the best performing stock of 2024 that now has order flows that's in the S&P. I'm just doing ratio spreads. I want to see if this thing will range. If we go high, low, high, lower, low, or just stay range bound, anytime we come back down to these levels, I'm looking for some dynamic support around these moving averages. If I get that dynamic support, I will start adding additional income trades. But I'm not buying this at highs. I'm not chasing Palantir. I think it had a heck of a run. Now we have a reality. What goes up can go sideways. What goes up can come down. So I'm not trying to, buy this thing at highs. Okay. I agree. Alibaba, Baidu, I like both of them for the income. Yep. I like both of them. What platform software to place my option trades? My broker's Tasty Trade. This is my Tasty Trade account right here. So I have a lot of accounts that I'm looking after, but yeah, Tasty's been really nice. I've been in there for a while. Easy to navigate, find, roll. Bid, mid, ask, pretty good fills. Commissions are low. There's a reference code or promo code in my Discord if anybody has a Tasty account. Again, doesn't really matter. It's up to you, but I'm happy with them. I've had a lot of conversations. I mean, I'm not really broker biased, but when people tell me, "Oh, my broker says I can't do this," then go to Tasty Trade. You can do whatever you want. I mean, I manage IRAs and trust accounts, corporate accounts, personal accounts, margin accounts. I can trade everything. I can trade all sorts of complex options and trade 3-4 leg options. I can trade futures. I can trade crypto, and it's pretty cost effective. I do. Yep. And you know why? Because Thinkorswim was Tasty 13 years ago. Thinkorswim was built by Tom Sosnoff, Scott Sheridan, who are now CEO of Tasty Trade, Tasty Live. Thinkorswim is what they built. That's what they sold for $1 billion. And now they built Tasty Trade for a, meaner, slimmer, sleeker, faster, more efficient broker platform. So it's taking like all the bells and whistles from Thinkorswim and making it way more intuitive and user friendly. Because Thinkorswim is one of that and Interactive Brokers were the two platforms that when I use them, I had to study up and go through the educational videos and just learn how to navigate those platforms because there's a lot going on. Tasty is not quite like that. Tasty is way easier to navigate intuitively. All right. Anyway, that's that. Okay, Palantir, I will wait. Carvana, nothing. Redfin, Zillow, waiting. Futures wise, we did futures a little bit. I'm looking at sectors. I've got some exposure in sectors. We're off to a pretty strong start across the board. The only lagging sector is consumer staples. We are getting a little bit of a pullback in energy. We're up 9+% energy. We've had a bit of a pullback. Oil's been dropping, the last week or so. S&P's up 4%. It was up like 1.6% or 1.5%. Now it's up, 4% to all-time highs. We're off to a good start. But one thing I will notice, and one thing that led us last year is if we go to the last year, okay, what sectors led? Communication services, consumer discretionary, tech. Okay, like right now, it's interesting to see like financials are leading over the last year, the last 12 months. Okay, communication services just had a big pop in Netflix. Pretty sure Netflix is in here. Yep. So there's your 7% weight. We had a huge jump up for 15%. Netflix is up 100% the last 12 months. If you go to financials, look, what? Oh yeah, Discover Financial Services, ridiculous. Just go to index weight. Okay, Berkshire, look at JP Morgan. JP Morgan for one of the biggest banks in the world, up 57%. Insane. Bank of America up 41%. Wells Fargo up 50%. Like these are crazy numbers for investment banks. And is there more to come? I don't know. They seem to be optimistic, but does it justify the valuations? I don't know. If interest rates go higher, I mean that arguably is good for banks, but interest rates going higher or pausing for that matter, it's like I don't know how these banks can just continue to rip at that type of clip. That is a crazy, crazy bull market. But it is interesting. Look, if financials and industrials and materials and utilities are leading or close to leading, historically, that has never been a good sign for the markets. So I think that we are potentially in like the last cycle of a bull market right now. We might extend it. We might stabilize, but I just think that this year is going to be a really interesting year. I think the market is still postured for gains, but I would not think 20% is doable. I could be wrong, and I would be happily wrong if the market is going 20+% this year on the indexes. My entire portfolio will be just fine. But what I want to make sure that if we go sideways or down, that I'm protected and I'm not, losing and giving back, really hard fought gains for the last couple of years. Okay. All right. Let's see. We did pretty much everything top down. We got a few more minutes for a closing bell. Added in trade. I added in a trade on. Go down to my tracker here. Added in Netflix. Added in URA. I took a call trade and a put trade on SPX. Added some trades to SLV, IBIT, URA updated there. Let's see here. Yep, I added to my diagonal spread. AT&T, I'm playing that one basically synthetic long. I did some puts. Snapchat, I might have some assignment coming in February. They've got earnings. So Snapchat has earnings on February 4th after market. This is the trade that I'm in right now. I'm willing to repair this stock. So what do I like about Snapchat? Here we go. I mean, it's the only way that I talk to my nephews. So I think you have a ton of users. There's lots of ads and crap on it now. I'm hoping they monetize it. Trading well below estimated values, earnings are forecast to grow. If they figure out the advertising side and rev side, the user base is really, really strong. It is dirt cheap. Now, I don't know how long I'm going to hold it, but if I've got fair market at $17, $18, I'm cool with that. If we have a range up here at $17, awesome. So what I'm looking to do is I just put in a bunch of cash secured puts. So 12, 11.50, 11, and 10.50. I collected 309. If I do get assigned on Snapchat, which would be price would be below any of these strikes. So if I get assigned on all of them, then my assignment would be 11.25. I mean, I could repair this. I would have potentially 400 shares. I could repair this for $1 and make $400 on it. And it only cost me a couple $1,000s investment. So, I mean, return wise, return on capital, it would be okay. I wouldn't mind holding it a little bit longer. If I could hold it for, $2 a profit, $3 a profit, I don't need a big move. If I could hold it back up to a rip to $13, $14, that's even better. Now, we could have positive earnings on this. If we have positive earnings and price is greater than $12, then there's no assignment and I just keep the $3 of income. So either way, I mean, if I take on shares, I will repair it. If I don't take on shares, I keep the income. If I take on shares, repair it, then I think I've got a pretty solid range from support around 850 to resistance around 17. And I would be happy with that as a profit target. So we'll see. All right. Where are we at for the remainder of the day? We've got 1 or 2 more minutes before the close. Market makers did a pretty good job defending areas today. We had just a little chop fest this morning, a little bit of flow back down to fill the open from yesterday. I did say that was a pretty inefficient move, right? We had that late day move yesterday, right during the final hour, like last 15 minutes. Then we opened up with a little pop here, allowed us to close out some SPY trades, and then we faded. So we faded back down below the I mean, it was like this was the open from Thursday, so we didn't come back down to that low. But you can see here, market makers did a pretty good job of defending, excuse me, defending resistance and support to keep the market, pretty neutral on the day. So that's where we are at with the final minute. Now, I'm wondering here, like, what is if I did a 0 DTE for the last minute? 6101. If I sell, I'm not going to get a trade here, but I'm just curious. If I sell a 6105, nope. 10 cents credit to risk $90,000. Is it worth it? No. There's just nothing left in the trade, right? So it is what it is. I was just curious if we, could get, 5 wide or 10 wide and, maybe grab 15, 20 cents in the last minute, but it's definitely not worth it. That's a lot of risk. So anyway, we're going to close here. And like I said, we got a lot going on for next week. So really quickly before we wrap up, earnings next week. Boeing has earnings on Tuesday that was discussed today. Starbucks. We've got Raytheon. I think RTX Technologies. That's not Raytheon, is it? RTX is just RTX Tech. So RTX is RTX Corp. And this is in aerospace defense. So back up towards these highs. Okay, fine. We have Royal Caribbean. That has been a big one. One of the best performing. I mean, this is nuts. I could see. Ooh, I'd almost love to take a short on this one. Let me see. What's the IV? It's probably garbage IV, but I can't do anything now. But I'm just curious. RCL 57 IV. Could I do a 40? Let me see what the strikes are. So up here towards like 260. If I did a 260 bear call spread, so sell, buy. I wouldn't mind taking this trade if I could put in a pending order. Get this one filled for like $2 or $2.50. Let me see what like an at the money. Or I would do this. I would buy the 260. If I buy the 265, 260. If I bought this for like 250. That'd be a pending order. I don't mind that trade. So that way, if we have earnings and it pops up towards the highs at 260, I can sell that with a bear put spread, and that way there's no assignment risk. And if it goes down, then so be it. I can obviously scoop up a dip if I'm interested in it, but I don't know. I think this one calls for like $400 strike or $400 fair market value. It is pretty expensive. Actually, price to earnings isn't terrible. That is crazy. Current price and fair value. That's wildly undervalued. But man, what a crazy run it's had. So again, after this type of bull run, I just wonder, do we even have just a little bit of a pause? Anything, and then maybe we can establish something like 200 moving average, previous resistance here, like any dip, any pullback would be great. If we don't get it, this is not a stock that I want to chase. So anyway, just look at my Walmart calls. All right. Joy, what trade are you, what'd you do on Walmart? Let's see here. Alan, I see your question there. Could you give us what services you provide? Yep. So services that I'm running right now. So I've got daily profit play. That's Monday through Friday. I have waterfall income. We're live on Mondays. I have double up alerts. That is a signal alert service. I'm in the works of an earnings course. Should be hopefully early to mid-Feb. I also have my Pulver alerts, which is with it's a collaboration I do with A1 Trading. But there's no education with Pulver alerts. It's just, look, I trade. If you want, my time, live sessions, education, services through Prosperity Pub would be classroom, alerts, customer service, strategy guides, all that stuff. Daily Profit Play, we're live every single day. Waterfall Income, we're live on Mondays. Services done really, really well. We're batting 90+% on Waterfall Income, 90+% on Daily Profit Play. My double ups right now, we've had a couple of wins. We finally got some decent volume coming back. I'm at a 65.2% win rate right now. So, and now that we have some volume, we've got some good flows next week. Hopefully we just keep stacking up and get some good flows. But that's a course where I'm looking for bigger wins. Daily Profit Play is more of an income strategy. Waterfall income strategy. Earnings course, we're certainly looking for, consistent gains, which is not easy to do, but I'm going to make them cost-effective earnings plays where, I'm willing to trade both sides of the earnings usually and just try to price them out where the efficiency of the market will still give us at least a bit of profit. So like this last week in Netflix, I paid $275 debit, walked away with $215 profit. And I traded both sides. So it didn't matter what Netflix did, up or down, as long as it hit my expected move in my calculation, we made money. And I do that on a lot of the earnings. Okay. Netflix, that's going to be the Pulver alerts through A1 Trading. I'll post that in A1 Trading. Okay, NNE. Yep, I don't even know what that is, but nano nuclear. Not even interested. This thing doesn't have any data until May of 2024. It's up. I mean, to me, this is like, hey, you want to trade quantum computing? Good luck. You want to trade nano nuclear energy? Okay. I have no context or history to do anything with this. I can look it up fundamentally and see if there's anything to it, but there might be very little data to pull from. So I would say this: unprofitable, not forecast to become profitable for the next 3 years. I would scratch it off the list. Pure speculation, right? Less than $1 million in revenue, earnings forecast to decline, highly volatile share price. I don't even want to touch it. There's no history here. So not for me. Not for me. All right. That being said, I think I can wrap it up for today. It's good. So for the week, pretty solid. Let me post a couple links here. If you'd like to follow me on Telegram, you're all welcome to. I got a free Telegram service as well as Discord. So I will post it right here. So this is my Chris Pulver Telegram. So copy that. Here is Chris Pulver Telegram. There's the link. And my Discord is, I'll give you a 1-day invite. And this is Chris Pulver Trading Discord. There you go. So again, all free to follow. I mean, you're going to get some information. Like it's not just me that posts in my Telegram service. So you're going to see some advertisements for webinars and other things like that. Like I, collaborate with a lot of the other experts and franchises in Prosperity Pub. So you're going to see some webinars pop up here, and you just got to deal with it. But this is a way for me to share information from me. This week, daily profit play 3 for 3 on my trades. Waterfall was 6 for 6. Double up was 1 for 1. Netflix 1 for 1. Little income trade this week, not bad. Placed a lot of trades this week. I think I don't know what I did for the week, but I had 51 trades today, 40 yesterday, 80 on Tuesday or Wednesday. So I probably placed a few hundred trades this week. Now, granted, that's with all these accounts, but cut that in. Let's just say, I placed, 10, 15 fresh trades this week, something like that. So I'm obviously active, but the way I see it is most of the time in the markets, think about this when it comes to options, okay? If you trade options, most of your gains, just use a straight line. If you trade options mechanically, right? And this means like zero technical analysis, zero opinion, and just trade deltas and trade market efficiency and trade market makers, everything you have for like typical tools for options. I'm not talking about options mispricing. I'm not talking about trying to find some big edge. The edge in option trading would be sell options versus buy options and find the optimum decay curve, which is 45 days. Tasty Trade has expressed that for 30 years. So it's not hard to see that stuff. Now, what typically happens though, distribution wise, is most of your gains are going to be here within about like half to 1%. And then the outliers are, we have some trades out here where you get some of those bigger winners, but it's very, very infrequent. And then your outlier downside moves are again very, very infrequent. So just like a typical bell curve, this is what's powerful about the options market. Most of the gains are going to be as they should be within about one standard deviation. This is going to be most of your gains, right? That's where most of your gains will come from. As long as you don't do anything stupid with crazy amounts of risk, you can avoid these crazy outliers to the downside and crazy outliers to the upside. If you are selling calls and doing bear call spreads, it's like you don't want to get stuck on the wrong side of that move. So I just exist in here. A lot of my trades, this is why I trade pretty actively and frequently, is a lot of my trades, I just try to make money in the sweet spot, because that's what works most of the time. And I can keep the risk pretty small, keep the wins pretty consistent, and just take a bunch of trades. And some traders argue with me on that. Some traders like, look, I listened to an hour-long podcast with Stanley Druckenmiller, and it was clearly a friend of his. It was, I don't even know what it was, like a podcast channel that had like 3,000 subscribers, but they were clearly golfing buddies. The one guy that was interviewing had a financial background. Druckenmiller's been arguably one of the best performing managers ever. He's averaged like 31% for his fund for 30 plus years. He worked for George Soros, ran his own fund. Now he's got his family office and stuff. But some big hedge fund guys back in the day, they were very, very concentrated with a lot of conviction, right? With a lot of conviction. So, when Stanley Druckenmiller was early in his career, he was 70% of his entire portfolio was in energy and 30% was in treasuries. He didn't own a single equity and he returned 40%. So he looks like a genius. And he did that for, and he talked, this is over like a 30, 40-year career, but he talks about like, those are some of the big swings he took early in his career. And now it's different, he admits that the market has changed and there's market efficiencies. And, it's like, it's just all about risk management, but it's like, that's not me. I don't like that. I don't like to be, hey, I'm going to be 90% in on this one trade because I think this is going to work. It's like, if I had the ability to trade options around it, I could be, if you force me to take on, like, let's say you have a portfolio and like, Chris, take it for me, trade it. I don't know what to do. And it was 100% in something. Well, as long as I can trade options on that one asset, I'd be pretty confident I can turn it into profit. That's the nice thing about trading options. But if you take away options from me, I just have less tools to work with. So do I trade currencies? Yep. Do I trade crypto? Yep. Do I trade futures? Yep. But man, options on all that stuff just gives me a lot more of a look, I can play defense. It's like a keto, right? It's like the market can ebb and flow and I can find a way to dodge, So anyway, that's just talk. Okay. All right. So if you join Discord, awesome. You join Telegram, great. We'll be back on Monday, final hour. Do this every day at 3 p.m. So come one, come all. I've got some other webinars next week. I'm going to be in let's see here. Daily profit play will be at 1 p.m. on Monday. I have another webinar, daily profit play, on Tuesday. And I think that's about it for right now. And then my typical like daily profit play sessions, Monday through Friday, waterfall income on Mondays. The final hour session, I'll do it from 3 to 4 every day. So we'll be live next week. All good. Okay. Hope to see you next week. It's going to be a crazy week. Mag 7 earnings, Fed on Wednesday, PC on Friday. We're also ending the month. So if the market ends February or January on a high note, awesome. We're sitting here just off these all-time highs. Okay, just off the all-time highs. Here is the 15-minute time frame. So for the last couple of weeks, that CPI move was the big number, which I don't know why the market got overly excited about it when we're clearly still trending up. But we did poke all-time highs today. So hooray, market can smile for a second. But if we end up fading and filling any gaps, there is maybe a stopping point here at the backside of the trend line. But it would feel pretty bad if the market just comes all the way back down and resets. So I don't know what's going to happen, but I would imagine that we can't just keep going up like this without having pullbacks. So I would say this: if we go up higher and we have more gaps, I would be extremely cautious of when this thing breaks a trend line. We are going to come back in a big way. So I would almost rather, just for the sake of not having to trade bubbles and busts, right, like booms and busts, I'd rather have the market just pull back a little bit and try to find some support. Then we can see some new highs. But the higher this goes and the dumber this stretches and the further it gets away from my 200 moving average, the more cautious I'm getting, because that will probably break at some point and it's not going to be pretty. So again, I just want to see something I can trade. And if it's sideways, I'll figure it out. I'm just trying to, if it goes up, I protect profits, I hedge. If it goes down, I'm already hedged, trying to make sure I'm playing some defense out there so my portfolio is not beat up too badly. All right, sounds good. That's it. Happy Friday. Like I said earlier, if you've been with me for any of my services, if you've been with me from the last 10 years of my education, I would like just send my email, pulver.chris@gmail.com. You can send me a testimonial of just experience trading with me. So particularly, I'm going to be sharing those testimonials if you're okay with it, sharing them with my earnings course I'm doing in a couple weeks. But just in general, it's good feedback for me to have and see what I can do better. Okay. Jamal says hard to trade at all-time highs. Statistically, it's not. I think the hard thing is that we've had a 2-year bull market, and we've also had a 15-year bull market, and we're sitting at all-time highs with an environment that really isn't justified at all-time highs. Higher inflation, potentially higher inflation coming. The Fed monetary policy is a mess. Fiscal policy is completely irresponsible. Geopolitical tensions that could break at any given point. But all that is the wall of worry that the market has continued to show that it's not that worried about until it is, and I don't know what it's going to break. I think something would break this year. It could be the bond market because, we have a failed auction for the U.S. Or we have a default from the U.S. Or we have, I don't know if our servicing our debt right now is actually our largest line item beyond military and beyond Social Security and Medicare, Medicaid. If we have our debt that is a higher expense yearly than everything we typically pour a ton of money into, that is a problem, right? But is it enough to break the market? The economy and the market aren't the same thing, okay? So like I said, we have climbed this wall of worry for the last couple of years since we came out of 2022. And it's been a pretty tremendous run, 2 years, 70+% from the bottoms in October. And we're sitting here at all-time highs, and I think it's hard to justify more all-time highs. And I think it's hard to justify all-time highs with, look, if we're going to blow off the top and go crazy high, like another 15, 20%, I think we're going into another bubble, and that is when we have a lot of pain ahead, but nobody sees it until it's too late. So I will be very cautious going into a bubble like this. But I think that there's more information out there that have everyone scared, and we climb this wall of worry that now we have like crazy amounts of optimism. And nobody seems to be paying attention to the downside. So I don't know. It is what it is. You trade, So there's not a lot of positions I have where I'm completely exposed, right? If something happens to the downside, most of my risk is defined and it's all premeditated and calculated up front. That's another reason I like to trade options. The market can fall off a cliff and stocks can go to zero. Yeah, I'm going to take some losses, and yes, it's going to hurt a little bit, but defined risk is my biggest friend because I can manage from there. So anyway, all right. Happy Friday. Have a good weekend, everybody. We will talk later. If you're watching on Financial Wars YouTube channel, please click the thumbs up button. If you're watching on my channel, youtube.com/Chris Pulver, click the thumbs up button. Comments are welcome. Love the engagement, love the chat during these live sessions. And we'll be back on Monday. All right. Thanks, everybody. Bye.